Good afternoon, this is Bob Iaccino coming to you from the CME Group trading floor in Chicago, talking metals. Talked about gold yesterday, precious metals. Let's talk about copper today, base metals. Copper is in a continued slide. Fourth day in a row down over 1% on the lows today, and it's 6 of the last 8 days that we've gone lower in copper, down almost, actually a little bit more than 1.4% this week. And that pressure on copper is being felt in all the base metals, iron ore, aluminum, to a certain degree palladium, and the precious metals as well, although those aren't necessarily related. Part of what's going on with copper, at least today, to continue the slide that it's been in, is China with the weak Chinese data that we got this morning. Chinese manufacturing PMI came out at 50.3, it was expected at 51.1. So not only did it miss, but it's right at that level where PMIs sort of balance between growth and contraction of a particular sector. So if the manufacturing PMI were to fall below 50, now we're in contraction of the manufacturing sector. 50 and higher indicates growth. So we're still in a growth stage of PMI, but it's been trending lower and it's right at that sort of fulcrum again, as I mentioned. Also, China itself has had a pretty slow return from the quiet economic times of their Lunar New Year celebration. The Lunar New Year, the main celebration is still over, but it is a 12-day thing, so they're still sort of unofficially celebrating and things are still slow. They've been coming back to trading specifically very slowly, and you would expect the manufacturing sector is probably climbing out of those celebrations slowly as well, hurting a little bit of the demand for copper. Also on top of that, without Chinese demand, some of the landlocked copper that's been mined and stored here in the US that needs copper prices higher in order to fit in the shipping costs of trucking, rail, and then sea-bearing shipments. The copper prices haven't gone high enough to do that. Copper is quoted at a premium over the futures price, and that premium hasn't budged either. So that landlocked copper is staying in those landlocked warehouses in Arizona and Utah. Then we also have the stronger dollar, which continues ever so slightly today. We've been kind of fluctuating in the dollar today. It was slightly positive, slightly negative, and it went back and forth. As the sort of repercussions from Jerome Powell's testimony eases off, the stronger dollar hurts all commodities. Now again, really not an overly strong dollar today. Rates backed up today as well. However, commodities are hurt by this new tone. There's a lot of people talking about the dollar index heading up to 91.75 or 92 from the below 90s levels that we saw, and that will keep pressure on commodities, all else equal. So even if the Chinese demand spikes up and the dollar turns back higher, pressure will remain on copper. This is Bob Iaccino talking copper futures from the CME Group trading floor in Chicago.